The UK is suffering from the worst economic collapse in history, and Europe is next. From owing a lot of money and a rise in inflation to a severe energy crisis, people have started to lose hope in the government. Today, we are going to talk about the UK's concerning economic situation and explore the far-reaching consequences for Europe as a whole. Starting with debt. The UK used to have a really strong economy, but it started facing big problems toward the end of 2022. They owed over £2.4 trillion, and it climbed all the way up to £2.6 trillion in 2023. The cost of things is also going up, and people have lost confidence that the country can pay back the money it borrowed. On top of all of this, there are many other problems like not having enough energy, the Ukraine war, taking sides in the Israel-Gaza war, and of course, Brexit. People are also worried about crime going up and housing getting really expensive. Now everyone is wondering how this disaster happened and what's going to happen next for the UK. Well, the UK tried spending less money to make its economy better. But even though they try to stabilize their economy, the country is still in debt, and things keep getting more expensive. The cost of living has also gone through the roof, and people's wages haven't gone up much. So the average citizen has less money to spend to make ends meet. A lot of rich people from other countries came to the UK too and bought houses. This made it really hard for British people to find homes. That's because all the immigrants were allowed to rent small spaces under the table for a lot of money. So people got upset with the government because it seemed like they were only making things worse. Brexit, followed by Corona, made things worse. The biggest mistake was Brexit. When the UK decided to leave a group of countries they traded within the European Union, they thought it would help their economy, but it didn't. Making new trade deals takes time, which hurts the economy. It also hurt the British pound, which still isn't doing very well compared to the US dollar. This is a sign that things might get even tougher, not just for the UK, but for Europe too. And the coronavirus came in 2020 while the economy was collapsing. This only made it harder for the economy to recover. The whole world was on its knees, but the UK had a harder time since they're a part of the global economy. So their currency and economy deteriorated a lot. During the first months of the pandemic, the UK's GDP went down by almost 20%. This was a big problem, and the UK had to put rules in place to keep people safe, like keeping a safe distance from people and travel bans. But these rules also meant that businesses had to close down, and the government had to spend a lot of money to help everyone. This also gave rise to poverty throughout the UK. Now, even though the government was paying to keep businesses open, people were scared of getting sick. So they didn't go shopping or eat at restaurants. This made the GDP even worse, and the UK was served one of the worst recessions in history because of it. Sure, other countries were also having problems, but the UK had extra issues with its leaders doing things that upset them. To make things worse, former Prime Minister Boris Johnson resigned from his post after some controversies causing further political instability. It's safe to say the UK is still struggling to get back to normal years later. Europe should really be concerned about the economic problems in the UK, especially because the UK is still a big part of Europe's economy. You see, if it keeps going on like this, it could cause issues for trade, investments, and overall economic growth in Europe. Ever since the UK left the EU, inflation and challenges in trading have already caused problems. This has made the British pound less valuable and imports more expensive. A decline in the UK's economy could result in a decrease in foreign investment, so fewer people would move there and imports will go down. Even the Stockholm strategy isn't enough right now. In fact, it was down more than 20% in 2022. They used to say putting 60% of your money in stocks was good, but this time they suggested people invest less than 45%. So what's the solution? Well, Goldman Sachs suggests investing in things like art because they think art can help you keep your money safe, especially when the economy is struggling. According to them, it is much more valuable than property or gold during inflation. Then there's also a big energy crisis in the UK. There's not enough supply and the prices are really high. Russia's invasion of Ukraine made things worse because they used to sell a lot of oil and gas to the EU, but now they can't. This caused energy prices to go crazy, and people are paying much more for their bills. And since the UK depends a lot on gas for electricity, and with Russia causing problems, it's getting even more expensive. The big energy companies are making huge profits, but it's causing a lot of trouble for people. Many small business owners like pubs and restaurants are also afraid they might have to close down soon. This means a lot of people will lose their jobs and go into poverty. Former Prime Minister Liz Truss tried to help by putting a limit on how much families can spend on energy, but it ended up costing the country a lot of money. Now, things like food are getting more expensive, and it's just making things harder. Even basic necessities like vegetables are hard to find. The government tried to help by announcing the largest tax cut since 1972 to lower the basic income tax rate and save people around £170 a year, as well as a plan to get rid of the extra 45% tax for people earning over £150,000, meaning big savings for the rich. But these cuts weren't very popular because those super rich also got to keep their big bank bonuses and corporate tax didn't go up as planned. Where was all this money supposed to come from? The UK already had a bunch of problems: high living costs, an energy crisis, lots of debt, and rising inflation. The proposed tax cuts would cost over £45 billion, and public services were already struggling. The idea was that if people had more money, they'd spend more. Yet economists weren't convinced, saying it wouldn't cover the billions in taxes the government needed, so they borrowed more money. The plan did not sit well with everyone, and investors doubted it because they believed it went against years of economic planning. There was a specific issue with how UK pension funds invest. They usually put a lot of money into government bonds called gilts. So when the mini budget was announced, the prices of these gilts dropped a lot. Pension funds had to quickly provide guarantees, and since they didn't have enough cash, they had to sell their gilts, making prices fall even more. It created a cycle that led to a big problem. So let's break it down. Some big money-related problems happened in the UK, and it was a bit like a chain reaction. Imagine starting a college fund for your children and putting in a lot of money into something special. In this case, it's government bonds called gilts. These are usually a safe bet since they don't change much in value. But the government did something that made the value of these gilts drop a lot. And here's where it gets tricky. Since the gilts lost value, the people who managed their savings had to promise more money to make sure everything stayed afloat. It's a bit like promising to pay your friend back if you accidentally break their toy. Now, imagine this promise ending up being as big as £550 billion when added up. It got so bad that the government had to ask for help. So, the Bank of England had to step in. They spent over £65 billion to buy some of these gilts and make the prices stable again. It worked, and the savings were safe for the time being. In fact, if they hadn't done this, the whole country's economic situation could have come crashing down overnight. But the UK's economy was still a bit wobbly, and the country had to borrow even more money. So the people got worried that the UK might struggle to pay back all these loans. Now the government had to make some tough decisions because of all this. They started thinking of cutting down on spending too. But people weren't happy with that because they thought it might make everything even more complicated. In short, the UK is in a bit of a mess right now. It's not just about money, it's affecting jobs, services, and even how much it costs to buy a home. The situation is part of a bigger problem that's not only happening in the UK, but also around the world because of issues like the war in Gaza and the energy crisis. So everyone's trying to figure out how to make things better. The world is facing some tough times with banks collapsing and China's economy in trouble. It might feel like things are heading towards a big change, and maybe it's time for us to rethink how we deal with money. Neoliberal politics don't seem to be working well anymore, and just trying to make the Western world stronger won't be enough. We need more than just an economic system that makes some people rich and leaves others struggling. What used to make Britain great, like its culture, society, and politics, seems like it's fading away. The truth is starting to show, and powerful people and big companies are ready to take advantage of it. They see a broken economy as a chance to invest in things for less money and control a population that's going through a hard time. The UK is just one example, and everyone who lives under a system like this is facing tough times. The real problem is hidden, but do you think people will realize how bad it is when this economic collapse starts affecting Europe as well? Let us know in the comment section below. Thanks for watching, and we'll see you again soon. Make sure to watch the next video.